All right, good morning. I've been streaming live on YouTube for about a month and a half now, trading on live sessions during the London session, and thought that it would be instructive to record a guide for people to trade along with me for what it is that we do and how we do it. So that's the purpose of this morning's live. It's actually my first time going live on Instagram, so pardon me getting used to the technology. So here's the gist of things. I use a color-coded system for trading. Trade signals are called using that color-coded system, and the colors are based on the associated level of risk for the signal code. Each of those signals generally requires a minimum amount of account balance to take the trade. And these are just recommendations. So when I call a trade, you will be provided with a take profit with my entry price and with my stop loss. Of course, by the time you enter the trade, you may have a better entry price than me. You might have a different stop loss. You'll have to make that adjustment given the parameters that I give you. What I do ask is that you do not ever enter a trade too late and that you do not over leverage. By too late, I mean this. Typically, most of the trades that I call are called on a 15-minute or a 30-minute confirmation. And all the trades that I call are time and date stamped. So if we were to make a trade today on a 15-minute confirmation, don't enter the trade 8 hours after that fact. That's a little ridiculous. Just be aware of the type of trade that it is. Green trades are major currency pairs. These are currency pairs that are Forex and involve the US dollar versus another major currency. So that's going to be things like the Great British Pound Sterling versus the United States dollar, the Euro versus the United States dollar, or the United States dollar versus the Japanese yen. Minor currency pairs are any other combination of the other major currencies, excluding the US dollar. So examples of that would be like the Great British Pound Sterling versus the Japanese yen, or the New Zealand dollar versus the Canadian dollar, or the Australian dollar versus the New Zealand dollar. The yellow trades are exotic currency pairs. This is any combination of a major currency and the currency of an emerging economy. Some examples of that would be the United States dollar versus the Mexican peso, or the Norwegian krone versus the Swedish krona, or the Great British Pound Sterling versus the South African rand. Blue trades are spot cryptocurrencies. This is a cryptocurrency protocol versus the United States dollar. An example of that would be Bitcoin versus the United States dollar, Ethereum versus the United States dollar, or Ripple versus the United States dollar. Purple trades are perpetual cryptocurrencies. These are cryptocurrencies versus Tether, USDT. Examples of that might be Tezos, which is XTZ versus Tether, USDT. Another example might be People, PEOPLE versus Tether, USDT. Yet another example might be F5, which is Ethereum Finance, ETHFI, USDT. Red trades are indices and commodities. Examples of indices include the US 30, which is the Dow Jones Industrial Average, the S&P 500, the NASDAQ 100, the Japanese Nikkei 225, or the German 30. Commodities include a number of things, including precious metals and energy. We trade gold, silver, platinum, palladium, US oil, UK oil, and natural gas. Orange trades include futures and stocks. Now, a future is a little bit different from the other assets that we trade because there's a 10-minute delay between the futures market and other markets. But it can include things like 6A1, which is the future for the Australian dollar, or 6E1, which is the futures for the euro. Then you have stocks. These are going to be called by the ticker of the company that's associated with that particular stock. So you could expect calls on things like Microsoft, which is MSFT, or Facebook, which is Meta, META, or Google, which is Goog, GOOG. And this is how the signals are actually called. Now, as of yesterday, and I keep track of this in live time, we currently have a record of 659 wins versus 571 losses, a win rate of 53.58%, and total pips won is 1,960,128. These results are since May the 2nd of 2025. For those of you who have been following along with the signal calls for quite some time, I was sick for most of the first part of this year, so I wasn't able to call trade signals. Once my health recovered, I started calling signals on May the 2nd. We already gone over all the signal call rubric in terms of the order of how these things are called. Again, green trades being your major and minor Forex currency pairs, yellow trades being your exotic foreign currency pairs, blue trades being your spot cryptocurrencies, purple trades being your perpetual cryptocurrencies, red trades being your indices, your precious metals, your oil, and your natural gas, and orange trades being your futures and your stocks. The core of my trading strategy is based off of something called an exponential moving average. An exponential moving average is a graphical representation of a certain number of candles. So what you'll see on the charts that I use on TradingView are a number of colored lines, which represent a number of things that help with the analysis of a particular trade. The 5 exponential moving average is yellow, and it represents the power of the buyers. The 13 exponential moving average is red, and it represents the power of the sellers. So when we're doing trades and you're looking at any chart on any time frame, if the yellow, the 5 exponential moving average, is over the red, the 13 exponential moving average, that means that the buyers have control of the market on that asset on that time frame. Conversely, if the 13 exponential moving average, the red line, is over the 5 exponential moving average, the yellow line, that means that the sellers have control of the market on that asset on that time frame. So obviously, if you're looking at a buy, you want the yellow to be over the red. If you're looking at a sell, you want the red to be over the yellow in an ideal setup. The other 3 lines that you'll see pretty often are the 50 exponential moving average. That represents market equilibrium. What you'll find is that price continues to come back to the 50 EMA over and over again. You have the 200 exponential moving average, which represents a minor support or resistance structure. And you have the 800 EMA, which represents major support or resistance structure. If you're familiar with another indicator called a Bollinger Band, then you know what the 800 EMA is. Those blue lines to the extreme of a Bollinger Band are the 800 EMA. It's basically the far end of the market. The last thing I want to talk about is determining trends. And this is something that I think that most traders tend to really struggle with. But the system that I use is very simple in determining how to do that. Before we enter any trade, we always identify the direction of price action. So if you're looking for an uptrend, you're looking for AGB. You want the 50 EMA, the aqua line, to be located on the top. You want the 200 EMA, the gray line, to be located in the middle, and you want the 800 EMA, the blue line, to be located on the bottom. So you're looking straight at the chart. The aqua is on top of the gray is on top of the blue. You're in an uptrend on that asset on that time frame. Next, you want to look for a downtrend. VGA. In this case, you want the opposite. You want the 800 EMA, the blue line on the top, the 200 EMA, the gray line in the middle, and the 50 EMA, the aqua line on the bottom. When you have that, you have a downtrend on that asset on that time frame. So this is the gist of what we do every day. The Quiet Storm live trading session is held every Monday, Tuesday, Wednesday, Thursday, and Friday at 2 a.m. Central Standard Time. That is the opening bell of the London Stock Exchange. And beginning tonight, or tomorrow morning rather, I'll be streaming live to both YouTube and Instagram and Twitch with the live stream. So I hope to see you there. Take a gander at this. It should post as a recurring video so that you can see it again. I'll see you guys from London.